Hey there, boo boo. Welcome to Forex.Today. Good morning, everybody. What a good day to be alive. What a good day to be a currency. I bet you the Queen is really pissed off, huh? Yep. I heard the Queen is brushing up her resume. She's going to need some extra spending cash. Not too bad at her age, huh? Yeah, do you know what her greatest skill is? She cleans and vacuums. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Trading currencies for a very long time. I love trading currencies. I think it's the best way to go. I watch the commodity markets, and the stock markets, and the bond markets, and all these other markets, but I always translate it back to the foreign exchange, and that is my sweet baby, as are you. We do these strategy sessions every morning, Monday through Thursday, here at Forex.Today. Where? Forex.Today! Forex.Today, that's cool. Where you are also posting your trade plans. Thank you for that. Every Friday I'm at FX Street for premium members only. And at FX Street, I am Forex Speaker of the Year. Cool. So, what's going on? Same old, same old. British pound is falling. Great. Hope you're selling it. What's the big deal? I don't think there is any. So let's find like the fallout. What else is happening? Can't find the fib. There it is. Just old stuff. All right, so this is euro dollar. Now remind yourself that this is a currency pair that essentially represents 40%, maybe 50, maybe 60%. The entire foreign exchange market. It's massive. And we're still just in an ever increasing tighter and tighter and tighter range. So if there are lots of things happening and the market feels like it's freaking out, just always kind of remind yourself, ultimately it's not really truly freaking out. But you noticed earlier today we got down to this support area, midpoint psych level, and it stopped. It stopped. Kind of cool. The reason I think it's cool is, if it's so out of control, we'd probably blow through all those little areas. But no, we bounce where we're supposed to bounce. Then we got sort of a move down in there, right? I think the only interesting move about this euro dollar down is that it happened, at 112.5, not 13, not 14, not 15. That's the only part that I think is interesting. But of course, euro dollar is coming down, but why would it be going up? The next area to be interested in is this area here. Now, if we get through that, and let's say we head down in the month of October, we do head down to this area. Well, two things. One, that would be a breakout if we were down here, is what I'm saying. Okay? Guess I should have my drawing tool. Right? I guess I should have my drawing tool. But that is a support, sure. A breakout trade would say down, back to this range, and then back down again. Also, I would take note, if I were me, about the psychological level of 110. And that will be important only because it's important to humans. There's no real rhyme or reason for it other than it's an important number for human beings. So here's the area that we're in now. If you go back to the middle here, it was important in the past. Probably be important again. This is a retracement down to 110, skyrocket up. But notice it's just a roll reversal off the left shoulder after a lower low versus that. So I would call that like a crown pattern or head and shoulders pattern. And it did what it was supposed to do. Didn't continue after that, but people just, they were okay with this wimping out again, sort of 110-ish. And back up, and now we're just consolidating. So really, if you look at it, nothing's really happened this year. Yeah, there's been some ups and downs, but mostly sideways, statistically, you'd think, right? Cool. So don't fret. Don't go all cuckoo. Don't fret. But dollar gaining strength makes sense to me. And that is my fundamental bias anyways. I don't think there's real reasons to buy euros. So it all just kind of makes sense, doesn't it? And every time Euro USD has gone up this year, I've told you that it's possible for you to just simply ignore that and wait to sell it high. Now that's called having a bias and trading your strategy, right? Or having a strategy to trade your bias. Right? No one's forcing you to do any of this. So we can go to like our friend Kiwi Yen. Live and let die. Yeah, so the real absolute total bummer of the century is getting knocked out of these. Just unbelievably, just horribly sad. That's the ones you cry about. But there's always another chance. So how do you want to play this? How would you analyze this technically? You can even grab this, huh? Yeah. Very, very disappointed for me. If I recall, I was in at, what, 73.50? I was in sort of in here. Went all the way up, came down, knocked me out. But, dropped 100 pips below my entry. And then is now back up about 100 pips above my entry. So you're like, oh, really? Really? Happens, man. Can I say? So, I built all that up and got to dust off and get back in, right? Get back into the ring. It's really a bummer, though. But I guess, I guess I shouldn't cry too much. I did sell the hell out of this on the way down somewhere. Especially it had to do with Friday was a huge day. So was it here, though? Was it just last Friday? I don't know. I did well on the OPEC news, and then there was the sell-off on Friday. So I guess it all works out, right? It all worked out, but still. Yeah, 3-second rule. Yeah, I know. But it shows you why you should hedge when you foresee, like when up here we saw the consolidation, we talked about the pullback, right? And then I think in here is when I started hedging. And then I guess Friday, it's so funny. It's like Friday. It seems like so long ago. But I remember being long Thursday night and short Friday afternoon, making money both ways. So I guess it all works out. But still, I'd rather have, my goal back here was to stay long all year. And it came back just enough. And I'm not willing to take the risk for a hope and a prayer. All right. So too bad, right? So sad. So my job now is, try to catch one of the falling knives. Is that nice? Did you know we were on a 618 this whole entire time? La 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 la. Anyways, want to get on that. Brandon and James did, huh? Yep. I like the way you trade. You ever seen that movie Swing Trade? I like the way you trade. I think it's Billy Bob Thornton becomes a rogue trader. Yeah, so I got my eyes on this prize. Just need a little dipsy-do. Come on, dipsy-do. Where are you? So my choices are like 74.50 and 74. You got it? Remember how to trade? Identify at least 2 levels of support in which you may be interested in buying. So let's do that. La 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 la. 74.50 maybe. Do 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 do. Bum 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 bum. Da 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 da. Come on now. How about just 74? Boom! The risk here is it goes up to 75 and then back down to 74.50. But I don't want to buy it at resistance. I want to buy it at support. So if it's going to come up, it's going to come down. So most likely, here's the future, up to 75. Maybe tomorrow pre-London. Patience, grasshopper, right? Patience. La 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 la. Do you have patience? Yeah. I got patience. Where's the trade? Put me in a trade. You have to have patience. Yeah. I got patience. Let's go. Well, good one, James. That's really good. Did you spread it out on different currencies? Excellent. Yeah, what I was saying last week, and hopefully it came across, I thought I kind of hit you guys across the head with the 2x4 to make the point. But you buy commodities, right? And looking at this 4-hour chart, you can see we finally kind of broke northward with the commodities. Yeah, it's two others not so confident. Yeah, what you do, you just don't worry about it. As long as that stops at break even, it doesn't matter. You're just doing your job. Right? Just doing your job like a factory worker. You walk in, punch the clock, put labels on cans. When the time is up, punch out, go home. Drink beer, watch the football game. I can tell you, I was watching the market when everyone else was watching the football game. I was watching the market. I'm like, holy snap. Look at that pig. By the way, I made some wicked, awesome pulled pork over the weekend. I don't know how anybody can go hungry in America. Well, Linda, I was actually kind of joking about the falling knife. A falling knife is actually the wrong analogy, so thanks for pointing it out. Hang on, let me get my drawing tool. So really a falling knife is a fast-moving trend down, and you're a buyer. That's actually quite dangerous. So that's really, I shouldn't have said that. What I'm actually looking for is we had a scenario where I want to be long, but the market came down, great, knocked me out, the market then consolidated, and now is breaking out to the upside, and what I need is the pullback. So it's not a falling knife per se. I'm just sitting around waiting for something like this. And, it's a terrible situation too when you were already long, and then now you're waiting to get back long again, and you're watching it go up and up and up, and you're not in it. I don't know, at least me, and I can't believe I'm that unique, but it bugs me, it irks me to think like this, that I'm long. I wanted to be long, I was long, I'm not long now, and it's moving up. And you're looking at it, and it's just bothering you. Wouldn't bother a computer or a machine, but it bothers me. Where I was long here. So anyways, I managed the risk. I don't want to lose, money. So whatever, I did my job, and sometimes it hurts, right? So now I got to remind myself that my job is to be patient and wait for it to pull back, and I'll get long again. That's really, yeah. And so I don't know. I guess when I'm babbling on and crying and stuff, it's just I'm emotional. I just it bugs me. It just bugs me. That's all. I'm not mad. I'm not sad. I'm not angry, but I'm irked. And I go, it happens. Here's the funny thing. It happens a lot in Forex. It comes back just enough. So, and then with the OPEC news and stuff last week, I think I just got caught looking the wrong way. I got busy doing other things when maybe I could have, and that's a bit of hindsight, I suppose. I mean, who really wants to get involved in this, right? Does anybody? I mean, look, that's 4-hour candles, right? Does that actually look like some fun trading right here? So I guess I can't judge myself too hard and say, oh, Wayne, you should have got in on that. You should have gobbled that up. That's like turkey dinner right there. I don't know. I don't know about that, right? So I don't know. I guess I shouldn't be too hard, and so now I recognize, okay, because really, I guess last week the pips that I made were easier than these pips, so I guess that's a good thing, right? Buying CAD, for example, was so ridiculously easy that was just a better trade. But this is the one I wanted to be on last month, right? So I don't know. So now I got to wait for that. And of course, it feels like it's never going to happen. But I have to remind myself that Forex loves me. Joseph says my first entry was perfect. Well, namaste, my friend. Thank you. So now I got to do my job and wait for the pullback, right? And this is the Aussie. Okay. And I was long 1 or 2 on these. I don't remember. So anyways, they're dead, so who cares, right? So again, last week, one of the things that I did a lot more than the last probably 6 months was buy Canadian dollar. So here's another one to consider. This is only a 1 hour chart. So this is the surprise OPEC move. It's really from this lower one, but I'll just count it. Retracement, Fibonacci, role reversal, whatever you want to call it, don't matter none. And up. So remember, this is not a demand side move. This is a supply side move. And it's a presumption of a supply side move. Because there isn't a drawdown in inventories, but there is an agreement to not just freeze output at 100% capacity, which is pointless, but at some point they're going to have to throttle back on oil, stabilize some prices. Great. That's good for Canadians, but that's good for Texans. Mm-hmm. Prime rib of oil. Right? So Texans are going to be happy. Housing prices in what? In San Antonio is going to go up. Do you ever think that you should now like buy some real estate somewhere because Iran and Russia have cut a deal with Saudi Arabia via OPEC to throttle back some production, so now you should start buying up real estate in Texas, in Oklahoma? Do you think that way, or is it just me? I guess I'm the crazy psychopath. Crazy. Jimmy boy is thinking about it. Yeah. Yeah, I still got my eyes on Venezuela. And I found a deal, actually. I'd have to over leverage. I don't know if I want to do that on Venezuela. Can you imagine? So, tell me, how did you lose your fortune? Well, it all started when I bet it big on Venezuela. You're like, oh my God. Doesn't every horror story start that way? Well, it all started back when I bet the farm on Venezuela, and things started to go bad. Yeah, I like the way you trade. So anyways, I do got a deal. If someone wants to throw a few million in, I got a good deal on something something in Venezuela. All right. Okay. So Canadian dollar, it doesn't excite me that much. Oh, you know what we should probably talk about? Let's go back to the Aussie. The RBA under low. I already miss Stevens, don't you? I'll go stick with the yens. Governor Lou. How low can you go? No more low, says Lou. So no more cutting interest rates is kind of what it stinks like. And one of the things we did talk about not long ago is that there is a floor. Where is my mouse? Oh, here it is. And one reason for this floor is, last year even, I remember chatting with a reporter from CNBC or Financial Times or something. I can't remember. I have to look it up. But she was writing on Australia. I made a comment on the meeting minutes, and I'm like, oh, but you totally missed something on this other paragraph. And I wrote her, and she's like, oh, yeah. And I think it had to do with them worried about the housing market, about creating a housing bubble, like that they want to cut interest rates further. They want to weaken the Aussie dollar further, but they're worried about creating a housing bubble. And so if you look, if you paid attention to the recent RBA, it seems like a million years ago, yesterday, last night, recently, they said that there's no evidence of that. They looked at multiple things right now. So like rents are pausing, applications for mortgages have fallen, and housing prices are not going up, and all that kind of stuff. So that's good for them, right? Because they want a true recovery based on a recovery in China, for example. So anyways, so even several months ago, this goes back to July. And going back to July, we discussed this being a floor, and it really now kind of feels that way. So a betting man would do this, right? And I'm more of a betting man in that case. Not that I'm a betting man. It's just I kind of want it to go up. And this has to do with seasonality too, because you got to remember in this time period, sort of to the left in July and August, what was my advice to you? You tell me. What were we supposed to spend the entire month of July and August doing? Yeah, buying this stuff. Yeah, not shooting at rabbits. Well, well, in simple terms, buying Aussie yen and holding it till the end of the year. Okay. August started out great, and son of a came all the way back in September. But back in here, back in sort of like, do you remember the third week of August? When we were up here, we were talking about buying the Aussie yen in the third week of August and holding it till the end of the year, right? This is the third week of August. Started out really nice, and son of a... well, we're never wrong, but, oh, god damn, right? So anyways, we're back here. So my theory up here was that it would fall till here and then rise. Close, right? It's this dipsy-do that made it really stinky. That's the stanky leg. That's the stanky leg right there. So it's supposed to go up, and it is going up. It's just going up without me, unfortunately. So I really need to get into these. So what I need is for the world to say we're at resistance and bring it down. Okay, and maybe the falling knife, if I were to go back to that, to go back to the falling knife thing, is maybe if it starts doing this, I need to buy it anyways. And that's the danger zone. That's really dangerous. So I got to manage that. So I don't know. I got to sit and wait. And it's hard. Oh, really? Oh, my God, James. Really? Must have been close. You must have got down to like 25 pips or something on it. Logan, I'll tell you next year. Bo, 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 bo. Yeah, you must have got really close, James. So that's cool, right? So yeah, so just got to wait it out, wait out the storm. But more, I would guess, more impotence for Aussie yen to go up if you consider, you know, I think the RBA stuff happened, what, sort of in this period. So, you know, I think what I was saying here, and I don't recall exactly, I think what I was suggesting sort of in this time period, or actually the time period before, sorry, is what we were getting out of the RPA was simply no more cuts. And I believe the discussion I was putting on the table back then was not up, but not down, is what they were saying. As far as the value of the Aussie, there was nothing more to weaken it, per se. Nothing's changed to make you want to buy it. Like, there's still no, at that time, wasn't good data out of China and all that kind of stuff. But the RBA's message was no more down. That's what a floor is, right? And for many, not down means up. Does that sound right? Like, if I'm wrong on that, let me know, because I am grasping at straws. But I believe the message then was floor. Not up, not down, just a floor. And that's a beginning, right? Because, you know, if you think of a downtrend as this, and then consolidation, and then eventually higher highs and higher lows for a reversal, that's how it all starts, where for a while there, you simply, for a while there, the uptrend starts with no longer down. It may not be up, but just no longer down. So most likely, if we are here in this process, you know, I want to catch this, which is best case scenario, I think, but it really takes a lot of nerve because you got to let it go and catch it on the way back, and that's really difficult. But the next difficult part is it comes down and you buy that, but you have to be willing to be wrong there. And then you're, so this one's difficult too, isn't it? So I've got to do my job, sit down, shut up, and get ready for the next trade, but that's what I'm doing. It's so difficult. I'm missing it. Yeah. So, see how easy? I told you Forex gets easy after a while, right? So yeah, got to do my job. So that is the hard part. The not trading is the hardest part. But the more I not trade, the more I not lose. Client says, "Hey, call dang it, why aren't you trading? I'm like, first of all, I wasn't, and I got knocked out of break even because I was managing your risk and I didn't want you to have additional risk. And now I'm looking at it and I'm at resistance and there's just no way I'm going to invest your money at resistance. There's just no way. I won't do it. I'm incapable of doing it. And again, it's part of risk management. So I got to sit and wait, sir or ma'am, for either that or for this. So I'm working my butt off not trading. Because that's what I do. Yeah. No one likes a break even. So anyways, I hope you don't mind, even though I'm half joking, you know, the other side of it is it is half. On the other half of the joke is it really is difficult. And it really is difficult to be patient. It requires a lot of discipline to be patient, doesn't it? So I hope you also get that across, that, you know, so many years ago, I hired a coach to work for me at FX Bootcamp. And before he became a foreign exchange trader, he was a sniper in the U.S. military. And the epitome of patient and disciplined, right? You're like, really? A sniper in the military? Well, the military is disciplined and the sniper is patient. And he told a story one time when he's in Iraq and he's up high on the side of a mountain. Him, a spotter, and a guy on a 50 cal machine gun just to protect their back. And, you know, way down in the valley below, they're watching a little town. And like, there's no one out, it's just these three guys on the side of a hill. There's no one for like 300 miles to back them up. So they're sitting there observing, being patient. And all of a sudden they see a couple of guys out on the road setting up an IED, setting up a roadside bomb. So it's clearly happening, right? So they call in, hey, they're setting up a roadside bomb. They're like, permission to remove threat. All right. Remove threat means put a sniper's bullet through these guys. So he does. 2 shots, 2 threats removed. And they're like, okay, done, doing their job. Just another day at the office, right? And then they said about 45 minutes later, the entire village decides that they're going to kill these 3 guys, these 3 Americans. Well, 3 American soldiers. He wasn't American. So anyways, the entire village decides they're going to go up and kill these U.S. soldiers that just took out these boys, setting up a roadside bomb. They were bad guys. But anyway, so the whole entire village, dozens of guys, decide they're going to climb up the mountain and kill them. Yeah, David Pegler, one of the nicest guys I've ever met in my entire life. And he worked for me for many years, never once let me down, not even a little bit. But anyways, he was telling me the story, and he said, you know, when you see that, and you're looking at it through your scope, and the spotter's looking at it through his binoculars, and the guy in the 50 cal is like, what's going on? What's going on? Tell me, guys, what's going on? And he said, every bone in your body wants to run. That's right. Run! Run! Like, you're dead. These guys are coming to get you. They're going to kill you. That's that. Their intent is clear. And every bone in your body wants to run. So they get on the radio, and they're like, yeah, we'll be there in a half an hour to pick you up. Half an hour? Permission to engage. So, long story short, the helicopter landed, picked them up, flew them home. And it was the training that allowed these three guys to survive against, dozens of people coming to kill them. But it takes a lot of discipline, right? A lot of patience. And so maybe if anything, he can inspire me to sit through this and, not freak out and just wait for my opportunity, and then I'll take my shot. And it's going to be a high percentage shot. You could probably imagine what happened to the, 2 or 3 dozen people that were running up the mountain to kill David Pegler. He got home and became a currency trader. You don't want to ask what happened to the 3 dozen people. But let's just say his training was excellent. So I am going to wait because my training was also excellent. I'm a very experienced trader. And even though it's natural for every fiber in my being to want to be long this again, especially psychologically, because I was already long, like son of a, right? No. I'm going to sit there and I'm going to do my job. I'm going to do it well, and that's that. Yeah, you fall back on your training, or, right, Mike? Or you freak out and you get yourself killed. How effective is a sniper when he's running? Yeah, not effective at all. Yeah. Oh, sure. Thank you, Jimmy. That's a good idea. So let me ask, though, do you do these things on your own without me? Like you've gone through it and you have a question. You're like, man, I've been looking at the calendar and I just don't get what this thing is. Okay, cool. So, ISM manufacturing, for example, got some really nice numbers. And if you were hanging with me 2 and 3 and 4 years ago, I was describing to you that this these ISM manufacturing numbers specifically are a form of trickle-down economic measurements, if you want to. It's not really what it's doing, but it's just a way of thinking of it. And it's your average Joe forklift worker in the factory. And it's truly the subcomponent, really, of the ISM manufacturing. So really, if you talk to a real economist, they would laugh and say, Wayne, what you're talking about is stupid, because it doesn't measure that. I'm like, I know. So if you know you're stupid, then you can't be stupid. So I use it as this trickle-down idea of like, how is the factory worker doing? Does the factory worker have the ability to take out a loan and buy a 7-year-old Cadillac Escalade on credit? Can he go to Sam's Club and buy a 70-inch 4K TV for his apartment that he rents? And if the answer is yes, then the economy in America is good. Now, of course, it doesn't measure any of these things, but that's how I kind of look at it. It measures the manufacturing sector of the United States and the activity and such, but we don't really live in an economy that is based on factories per se, right? The stuff I buy probably isn't made in America, but why would I pay an American to do that? Right? Americans should come up in the ISM services number. Really. But, so this isn't just that. So anyways, looking at this, you know, we got a much better expected ISM manufacturing number. So you can say manufacturing sector is doing very well. I mean, like that 51 is huge. Huge. That's really good, especially when the dollar hasn't been terribly weak. I mean, it hasn't been terribly strong. The dollar's been this same price for, seems like a long time now. You know, if you compare it to the euro, for example, we've been between 105 and 115 for a long time, or even just kind of hanging around 110 for a long time, even though euro is generally weak, right? So anyways, that's a really good number. And if you were a Fed watcher, how would you what would you assume right away? How would you translate the 51? Not necessarily the 53, the 51 and a half. Lots of manufacturing activity. Confidence in the US dollar because of what? Hendrik says UK services more important than manufacturing as well. Look, nobody cares about anything about the UK. It's sell the pound. That's it. Okay, so like good news out of the UK means don't sell the pound today. And if it's not good news, then sell, like if it comes out as expected or not as expected, sell it. Good news just means don't sell it today. But that's true. Like, don't complicate it. So like after, like yesterday's gap, I wasn't able to record the video, but if you attended the webinar, we talked about the gap down. I'm like, of course it gapped down. And then it partially filled and then it collapsed. I mean, of course, that's what you do. Yeah. So anyways, so yeah, so this gets translated into the Fed has to raise interest rates. So look, I do a lot of assumptions. And sometimes I forget maybe you don't do these things. But like Fed Watch, right? I know you watch this probably, what, every day, every other day? And go to the D's. Look at that, guys. So you got to take the 55.5 and add the 6.5, right? So anyways, it's like 61% chance they're going to raise interest rates by the end of the year. But this was a lot lower than that just recently. Okay. Okay. So that all gets translated, from this, right? For example, great manufacturing data, even though we're not a manufacturing economy, many would say, oh, well, the strong dollar is going to kill exports and the Fed can't raise interest rates. We'll say, trade it, please. Manufacturing is great. You'd have to assume manufacturing is going to be part of exports. Manufacturing sector is booming. It's not crashing. Like, oh, snap, room to raise interest rates. Okay. James says, couldn't the statement over the weekend by Theresa May be positive for the pound because they're talking about getting it done? No, they're talking about train wrecking it. They're talking about like charging the line. So you're a soldier, right? You're a British soldier and you're staring at the enemy, the Europeans, right? The French and the Germans, the Dutch, right? They built a wall around Europe, and you've decided you're going to attack, and you're just going to do a full frontal assault, just charge it, just a hard attack. Like, forget about complicated plans and dealing with this issue and dealing with that issue, and no, it's going to be a hard Brexit. We're just going to pull the trigger and attack, right? That sounds like a bloody mess. You know what I mean? It just sounds like a bloody mess. Just imagine there are hundreds of little details that need to be hammered out by politicians and diplomats. Just, right? Real delicate stuff that you don't even think about. Like, what if half the people in the British banking system will lose their passport because they're not actually English citizens? And you're like, really? Well, we'll just have to, I don't know, come up with some sort of visa for them. All right, we'll create the visa. How do you create a visa process? And how do you put it in the computer system? And are you going to have to do background checks on them? And by the way, it's 35,000 people. And just, is the government even capable of quickly but still thoroughly processing 35,000 people? And most people will say that the government's not capable of doing anything. So to just say, well, we're going to create an entirely new visa, create up a governmental bureaucracy to handle it with new leadership and new processes and new computer software and all that kind of stuff. We'll just bust that out quickly. And then we'll go through and we'll do whatever needs to be done to quickly and efficiently and with low cost pump out these brand new visas for 35,000 workers, and we'll do it quickly. It's just like, whoa, there's just no way that's going to happen. Right? You just think like, what if there's like hundreds of issues like that? Because things over the last 20 years have been done around European Union ideals or standards or such, and now they're no longer valid, right? So anyways, if you're just going to like charge the line, so I was talking about this recently actually, the Art of War. It discusses that there are honorable victories for a general, and there are dishonorable victories. And of course, there's no honor in losing, right? But unless you're saving men, saving soldiers' lives, and getting out with the lowest amount of losses possible. But generally, you have to look at victory. And like, if you do a siege around a city, it's going to take a lot of time. It's going to take a lot of resources. And when you charge the wall, and then even get over the wall, it's going to be bloody. It's going to be an awful, bloody mess. And you're going to lose, like, for every one enemy soldier you kill, you're probably going to lose 10 of your own. So you have to go in with 10 or 20 or 30 times the numbers to take the city. Very, very dishonorable. or if you've pinned your enemy in, like against swamps, or you're in between your enemy and their city where they're trying to retreat back to their families, or all these other situations, you're going to put your soldiers in, even though they have superior numbers, you're going to take big losses because your enemy will suddenly fight to the death. And that's very, very, very dishonorable. So, to me, saying things like, screw it, let's just do a hard Brexit, because we're Brexit people and we wanted Brexit, and now we got it, so screw it, let's just do it and deal with the consequences. Holy crap, are you serious? That's like the worst, most dishonorable strategy you could possibly take. Like, screw it, let's just attack and deal with it on the fly. Yeah, that sounds like a lot of risk to me, and the British pound collapses. Because everyone's like, really? You said screw it? Well, screw it, give me my money back. I'm getting the hell out of here. Good luck with the zombie apocalypse that you created. So, you get it, guys? I think that's what's happening. That's the strategy of the United Kingdom's leadership. Screw it, let's just do it. Let's get it over with. What happened to this patience and discipline stuff we just talked about? They could sit on it for 5 years and prepare. You see what I mean? They could just prepare for the next 5 years, deal with all these little issues. They're going to want to talk and talk and talk and talk, and nothing's going to happen for years. And then they'll do a little department here and a little department there, and they could take a decade to do Brexit, and that would probably be the right strategy. Yeah, it probably would take 10 years. But they're just going to pull the trigger and run. Just go. Let's just charge the line. Charge! Draw your swords. You're like, oh my God. Right? So do this. Rent a movie about the American Civil War. Watch all the battle scenes. And think, holy crap, that's amazingly stupid. And then say, yeah, well, they learned that from the English. Adam says, I think Theresa May caved into pressure. Yeah, well, if you're a leader, you don't cave to pressure. Like, I'm the Prime Minister of the frickin' UK, y'all. Right? I got nukes in my backyard, Bubba. I'll send some Harriers your way, bro. Right? Like, what pressure? Political pressure? Just send the tax guys to audit them. You ever read Machiavelli? You'd say just throw them all in jail. Political pressure goes away. Boom. What's the problem? Right? Politics goes back a long ways. Just find out where their housemaid works. Oh, you have a maid from Guatemala? Your career is over now. You're like, what? If that doesn't work, dead hooker in the trunk. That has worked for forever. That goes back to Pompeii. Right? Hey, is that a dead prostitute in your chariot? You're like, no, that's not my chariot. Well, it's got your name on it in gold leaf. No, you're mistaken. No. That's not my chariot. I have to go now. Telling you, man, it goes back a long time. Not my chariot. All right. So, hey, wow, that only took 20 minutes to talk about PMI, huh? So anyways, PMI, that's what it means. You see that? Fed funds rate goes, Fed fund futures, the spread between forward contracts, I guess you'd say, in the interbank and Fed funds futures market change in such that you could look at probabilities of Fed hikes through the differentials in pricing, blah, 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 blah. So, yeah, that means buy the dollar. So, what else is going on? There's the RBA stuff I talked about. Look, they didn't raise interest rates. So, not raising interest rates, why would the Aussie dollar go up? Well, first of all, they're not cutting interest rates. And second of all, did you read the statement? No, see, I know you read the statement. I know you did. Because that's what you do. You're a professional Forex trader. And you can say things like, wow, did you see that whole piece on the real estate market? They gave 7 different reasons why it doesn't look like there's a bubble. Cool. Now, you could interpret this the other way. And if you argued it, I would accept your argument. I may not agree with you or disagree with you, but your argument could be because there's no longer a need to worry, or let's say evidence shows that you don't need to worry about a housing bubble because it's not forming, that you could cut interest rates further if you wanted. So if that's the case, if that opens the door for further cuts, if the RBA needs it under the new RBA leadership, remember they have new leadership there. Lowe, right, is now in charge, not Stevens. So Governor Lowe. But what else, right? What else would maybe make the Australian dollar go up? Better numbers out of China, right, exactly. And that happened Sunday. Yes, it's not even on here, so it comes up on last week. So you should already know that. So yeah, better numbers out of China is definitely going to make things better for Australia. But also just generally, the commodities. We discussed that out of OPEC and all that kind of stuff. I don't know. It's all good. It's all good, bro. So Aussie, okay. ISM services now. We're a service economy here in the United States of America. So that's generally more important. Trade balance, I'm hoping for a horrible trade balance. The more negative the number, the happier I'm going to be. Why would I want that? Because I'm trading dollars, and that means I'm filthy, stinking rich, and I'm buying crap from foreigners. And that number gets more and more negative. You see what I mean? Yes, I want lots of imports. Because I'm just buying stuff. Right? Just buying lots and lots of stuff. Filthy, stinking rich. How many imports do poor people buy? Let's say most of your economy is poor. How many imports do you buy? If everyone around you is poor, they're willing to work for cheap. And if you're poor, you're not buying Gucci. You're not buying, you know what I mean? If you're poor and everyone around you is poor, and you're like, man, I got to buy some American-made stuff. It's expensive, but it's worth it. Okay? So what ends up happening, or what maybe should be happening, is that you buy stuff from locals because there's no import costs and customs costs and shipping costs all priced into that product. You're just buying local stuff from your own economy, and we know the workers are cheap because you're not making money and everyone around you is poor, so they don't earn much. So those products are already cheap and they're already plentiful and available, and you might not like them and they might not be fancy, but you can afford them. A rich person says, I can't buy stuff made here because everybody here is rich and everything here is expensive. Because everybody's rich. Right? You get it? Like the factory worker is rich. You're like, oh, everything they make now has to pay that factory worker on top of the other costs, right? So everything goes up. You're like, wow, everything here is expensive. Good thing I have a lot of money. I think I'll just buy some stuff from foreigners. Because foreigners they don't make this kind of money. And I think it's the proper redistribution of wealth. I don't think it's up to a government to redistribute wealth, because that's the natural cycle. So let's say America starts buying a lot of stuff from China because whatever China makes seems unbelievably cheap. Well, stuff from China now is not unbelievably cheap. And if you go to China, they have beautiful cities and beautiful infrastructure. Lots of investments been made. Not because it was coerced, but because foreigners wanted to make those investments and access their markets too, as well as get better stuff shipped to their markets. And what happens is all of a sudden China goes from super poor to a hegemonic power and the second largest economy in the world. But think of, how about like for like England, the United Kingdom. Well, in 1840s, after the repeal of the Corn Laws, they became filthy, stinking rich during the Industrial Revolution. And they invested into America. And then America became filthy, stinking rich. So America's invested in China. Now the Chinese are becoming filthy, stinking rich. You know, like, it's something ridiculous, like housing prices in Shanghai go up like, I mean, it was hard to believe. It was like 25% like a month or something, like unbelievably ridiculous, out of control, hard to even believe. I was going to say 10, but I think it's even higher than that, right? So it's just like, wow. But it's a redistribution of income. Yeah. So if I can take my money and invest it there, they're going to be better off, right? But, you know, no government, the American government didn't send my money. So anyways, ISM services, very good. Factory orders, you know, I would assume, since we got a good manufacturing data, that factory orders are going to be good, because that's why we got the good data. So whatever. Australia trade balance, yeah, we need to know if China is buying their stuff. So watch the export side of the trade balance data out of Australia. Oh, did I skip it? ADP, of course, right? Wednesday, another dumb prediction. That's a great scalp. We'll do that together, because I like you. You're pretty. right? And then nothing else really the rest of the week. I mean, I guess non-farm payrolls. Okay, so Friday is actually great because we got NFP, of course. Probably a great opportunity to sell the pound. You might want to look at pound Swissy, not pound dollar, pound yen, just because those are going to be tied to NFP, so they may stall out. But then we got NFP, but look at the CAD side of the equation. IV PMI and kitty CAD jobs. Yeah, Fred. Fred, are you in the big TO? Fred says, "What do you think about the Toronto real estate bubble?" Yeah, you know, Toronto's really turned itself into a nice city. I like the downtown area and all that kind of stuff, and I like the area where you know it's all the different sporting teams are all right there. I mean, it's really good. The baseball stadium, the hockey stadium, basketball stadium, just it's all right there with nice promenades and shopping and restaurants. Done a really nice job. Toronto's a beautiful city. But probably the most expensive city I've ever been to. I don't know about housing prices, but you know, clearly expensive. 500% in 15 years. Yeah, that sounds a lot, right? But what bothered me was just like cruising around town in a cab or ordering a cocktail and a cigar